Good morning, ladies and gentlemen. My name is Lukman, and I want to welcome everybody to FXTM's Week Ahead webinar, Market Themes to Watch Out For. Before moving ahead, I want to confirm if everybody can hear me clearly. Excellent. Okay. So with the FXTM's Week Ahead webinar, what we aim to do is simply to recap on the market themes and events which have happened the week beforehand and what to look out for in a fresh week ahead. So what are we going to discuss today? We're firstly going to have a review of the markets last week. It's very important to understand what happened last week because it could play a key role in what we may see in a new trading week. Then we're going to discuss the key themes to look out for in the week ahead. When everyone's happy with that, we're going to have a breakdown of the economic calendar this week. And finally, we'll discuss some technical and fundamental setups to go through. This will be concluded with a question and answer session. So a review of the markets last week. I believe the key themes last week, or the key theme everybody was talking about, was the dollar's appreciation. So King Dollar was back in town last week after January's firmly hawkish FOMC meeting minutes simply reinforced market expectations of a Fed rate hike in March and further hikes throughout 2018. We know that the dollar has become increasingly sensitive to monetary policy speculation, so the increased expectations of higher US interest rates have heavily supported the greenback. After the dollar appreciated, we saw gold was punished by renewed rate hike expectations. Gold had one of its worst trading weeks since early December 2017. The reason why gold depreciated was because number one, the dollar was strengthened by market hopes of higher US interest rates, and number two, we know that gold is zero yielding, so in an environment where of course rates will be increased, gold is likely to be exposed to downside risks. Finally, looking at the pound was offered some support last week after Mark Carney and other policymakers after Mark Carney and other policymakers adopted a hawkish stance during testimony to Parliament. Although this was the case, interestingly, last week as well, we had UK GDP figures from the United Kingdom in the final quarter, which was downgraded to 0.4%. This did deal a slight blow to sentiment towards the pound, although the disappointing economic release is not strong enough to derail the Bank of England from moving away from its hawkish path. I believe that the slowdown in growth is likely to raise concerns over the health of the UK economy in 2018, and this is another key theme we should start looking at. We saw market sentiment was quite skittish last week thanks to, rate jitter hikes and inflation fears. It's becoming quite clear that the fears revolving around rising inflationary pressures and rate hike jitters have left investors on edge. And this can be seen in global stocks, which have been on a chaotic rollercoaster ride since initially January's impressive NFP a few weeks back. Interestingly, though, even though global equity bulls and bears are currently in a tough tug of war, this morning Asian equity markets have actually ventured higher. Moving forward, I believe with the market sentiment quite fragile, we can see stock markets swinging between losses and gains. Finally, we saw Bitcoin dip below the 10,000 level last week. We've been speaking about cryptocurrencies for an extended period, and although the how could I explain it? Although there's some excitement around the digital currency space, but it's cooled down compared to what we saw in December. Right now, taking a look at the technicals on Bitcoin, we've always been saying that 10,000 is a very important psychological region. The fact that the week concluded below 10,000 and extended gains over the weekend to 9,300, this could start raising questions if what we saw earlier was simply nothing more than a dead cat bounce. So recapping, the first thing we saw last week was the dollar boosted by January's hawkish FOMC minutes. To go and to dig deeper into their FOMC minutes, it must be kept in mind that Fed policymakers did express optimism of the health of the US economy and actually believe that inflation will eventually reach the 2% goal. Let me pause. I'm I want to just re-clarify once more. Could everybody hear me clearly? Because some people are complaining they can't hear me. So am I clear? Okay, I'll continue. So just from where I stopped off, it must be kept in mind that Fed policymakers expressed optimism of the health of the US economy and believed that inflation would eventually reach the 2% goal. And when we dig deeper into their FOMC minutes last week, word for word, Federal Reserve members agreed that the strengthening of the economy increased the likelihood of further gradual rate increases, and such is likely to support speculations of higher rates. If you look at the CME Fed Watch tool, the market's actually pricing a 62% probability of 3 rate hikes in 2018. Going back to gold, as we said earlier, gold was under intense selling pressure thanks to an appreciating dollar. In a situation where US interest rates or speculations continue to increase over high US interest rates, gold, which is zero yielding, is likely to remain under notable selling pressure. Even though sterling was offered some support last week after Mark Carney and Co. Um, adopted a hawkish stance during testimony to Parliament. Um, the disappointing economic data in the fourth quarter, which was downgraded to 0.4%, is likely to start sparking concerns of the health of the UK economy as we move into 2018. Market sentiment continues to remain skittish, thanks to fears about rising inflationary pressures and rate hike jitters. And finally, Bitcoin dipped below 10,000. So these are the 5 key things that we saw last week. Could everybody see my screen clearly? Okay, thank you. Perfect. So, for those who didn't see the screen at the start, I'll just quickly start again. So, as I said, the key themes can be seen here. Dollar boosted by the hawkish minutes, gold punished by renewed rate hike expectations, sterling offered some support by BOE Carney and Co. Market sentiment skittish thanks to rate hike jitters, and finally Bitcoin dips below 10,000. So, the key themes to look out for in the week ahead. I think that the euro could find some support from ECB President Mario Draghi's speech later today. So ECB Draghi is due to testify to the monetary policy and the inflation outlook before the European Parliament Economic and Monetary Policy Committee today. Of course, naturally, if Draghi adopts a hawkish stance, such is likely to support the euro dollar. Alternatively, if Draghi is cautious, the euro could weaken. Another theme that we're looking for in a week ahead is stock markets to remain shaky amid inflation and interest rate hike fears. Um, Interestingly, although Asian stocks have edged higher today following Wall Street's rebound on Friday, it must be kept in mind that market sentiment still remains quite skittish, and such is likely to place global stocks on a roller coaster ride. Looking at the dollar, I'm expecting dollar volatility ahead of Fed Chair Powell's testimony later this week. Interestingly, the dollar has slightly weakened this morning. Yes, while expectations of higher US interest rates are likely to continue supporting the dollar, well, there's probably the uncertainty over what Fed Chair Powell will say during the testimony is slightly pressuring the dollar right now. You have to keep in mind that for an extended period, markets have seen Powell as somewhat as a cautious dove. So it will be interesting to see what he says during the testimony this week. Finally, looking at gold. Gold could be injected with action this week. As of now, the dollar is weakened and such has pushed gold prices higher. But longer term, the fact that expectations remain heightened over higher US interest rates and the dollar's final support from rate hike talks is going to continue pressuring gold moving forward. So when we're playing with gold, we're going to be looking at the technical levels later today. So a breakdown of the economic calendar from Monday 26th of February to Friday 2nd of March. As I said earlier, we have ECB President Draghi speaking at 2 p.m. today, who is due to testify on the monetary policy and inflation outlook to the European Parliament. As we said earlier, if he's hawkish and expresses optimism of the European economy and inflation reaching the 2% goal, this is going to support the euro. Alternatively, if he adopts a cautious stance, naturally the euro will weaken. On Tuesday at 1:30 p.m., we have core durable goods orders from the United States and Powell's testimony. At 3 p.m., we have CP consumer confidence. So Tuesday will be a day of dollar volatility with the main event risk, of course, Powell's testimony. Markets will be seeing if it will remain status quo following Yellen or if it will provide any surprises. On Wednesday, we have business confidence from New Zealand at 12 a.m. 1:30 p.m. we have prelim GDP for the United States, and at 3:30 p.m. we have crude oil inventories. So with oil markets, looking closely at oil markets, it's been a wild month. February has certainly been a wild month for oil markets. At this early February, ongoing concerns over rising production from US shale heavily impacted oil prices, and we saw WTI crude and Brent tumble. Interestingly, though, in the middle of February, oil prices have recovered due to, how could I say, some cautious optimism over OPEC supply cuts eventually rebalancing markets. Longer term, though, fundamentally, I believe oil still remains fundamentally bearish, with US shale still remain a big threat to higher oil prices. On Thursday at 12:30 p.m. a.m. we have a private capital expenditure in Australia. At 9:30 a.m. we have manufacturing PMI from the United Kingdom, which is very, very it's important. Of course, services PMI are quite important as well, which we've released the week previous. But with manufacturing PMI, it will show how much the manufacturing sector has fared in the United Kingdom post-Brexit. Naturally, a soft figure will naturally weaken the pound. A positive figure will strengthen the pound. At 3 p.m., we have ISM manufacturing PMI in the United Kingdom. On Friday, at 1:30 p.m., we have CPI in Canada. 9:30 a.m., we have construction PMI. And at 1:30 a.m., BOE Carney speaks. At 10 a.m., BOE Carney speaks. At 1:30 p.m., we have GDP from Canada. So the fundamental trading setups I'll be looking for this week. Um, Let me just recap on the economic calendar once more for those who missed it. Okay. So, as I said, Monday we have Draghi speaking. Tuesday will be a day for the dollar with the core durable goods, CB consumer confidence, and Powell testimony. Wednesday, much attention, of course, will be looked at the crude oil inventories. Thursday, we have the private capital expenditure in Australia, manufacturing PMI, sterling, and ISM manufacturing PMI for the dollar. And of course, on Friday, we have a bunch of economic releases from Canada, CPI, inflation Canada, construction PMI in the United Kingdom, and Carney speaks at 10 a.m. in the UK. The day will end with GDP from Canada. So this week with the fundamental setups, let's see. The dollar, of course, naturally remains buoyed by renewed rate hike expectations, but let's see what Powell brings to the table this week. If he's hawkish and he continues to signal that the Federal Reserve will be raising interest rates in 2018, the dollar could receive a boost. Alternatively, though, if he's the cautious dove everyone's been expecting and is, doesn't provide fresh insight or clarity on rate hike timings, the dollar could weaken. We're expecting the pound US dollar to be volatile ahead of Prime Minister May's speech. I believe May be scheduled to be speaking sometime this week. We know that the pound US dollar remains quite sensitive to Brexit developments, and any uncertainty revolving around Brexit is likely to continue weakening the sterling. Looking at the commodities arena, while gold could remain pressured by a resurgent dollar and rate hike talks, if uncertainty over in the markets via, fears of rising inflation, interest rates and stock markets start to be volatile, gold could find support. And finally, of course, speaking of stock markets, are global equities bears back in town? Um, with investors on edge and quite skittish, it'll be interesting to see where global stocks conclude the week. So now we've spoken about what to expect today, let's cover the technical setups and fundamental setups. So on the charts here, I have the euro dollar on the weekly. We've been looking at the euro dollar for an extended period of time. Of course, on the weekly, we can see that the euro dollar continues to fulfill the prerequisites of a bullish trend, as there have been consistently higher highs and higher lows. Technical lagging indicators such as the MACD and moving average both do point to the upside. What we'll be looking for this week, it could depend on what Draghi says or the tone he adopts. If Draghi is hawkish and does provide further insight on when QE may end in 2018, or when the European Central Bank plans to raise interest rates, the euro could receive a boost. Looking at the euro dollar closely on the daily charts, this is a very interesting picture we have here. The MACD continues to trade to the upside, and prices are trading above the 50 moving average. I'm taking a very close look at how the candlesticks react around the 12350 regions. A daily close above this level could encourage a further incline higher towards the psychological 1240 level. If we zoom back to the weekly, we can see that 1252 has been resistance level since back in 2014, November 2014. So we could have a situation where a decisive breakout above the 1235 could encourage an incline towards 124, and finally the end go up 12520. Alternatively, though, if the dollar continues to find ground and appreciate amid renewed rate hike expectations, such could encourage euro-dollar bears back into the game, and this could result in a breakdown below the 1226, with the next point around 122. Fundamentally, the fundamentals behind the euro remain bullish in the sense that the sentiment towards the European economy is positive amid the improving macroeconomic landscape. There's speculations that the European Central Bank is going to end QE by the end of 2018. Now, if we have a new speculation or new optimism over the ECB potentially hiking interest rates, removing interest rates from the negative territory to positive, probably beyond 2018, such continues to support the euro. Although the dollar has now found support by renewed rate hike expectations, the trajectory of the euro dollar still remains interestingly bullish on a weekly, monthly, and daily. With the levels I've said back on the daily, we're looking at how prices react around the 1235 level today. A decisive breakout should open up after 124, 12520. Alternatively, though, a failure for the bulls to break above the 1235 could encourage a decline to 1226 and 1220. This is a bear chart on the pound US dollar. So the pound US dollar, interestingly, is finding support in the form of short-term dollar weakness today. Technically, the MACD has traded to the upside, and prices are back above the 20 simple moving average. So what daily traders will be looking at will be simply if we can secure a decisive daily close above the 140 pivotal level. As you can see, this has been a sticky region for the pound US dollar for an extended period of time. And a daily close above this level could invite further upside. Fundamentally, though, looking at the pound US dollar, it seems that the main driver right now behind the pound US dollar's upside is just dollar weakness. Um, Looking at the pound, though, fundamentally, when we put the Brexit uncertainty into the equation, the fact that economic growth for the final quarter in the United Kingdom was downgraded to 0.4%. So fundamentally, the sterling still remains under pressure, and based on this, the pound US dollar still remains exposed to downside risks. Going back in the technical though, as long as bulls are able to keep above the 140 level and the upside trajectory holds, the next key level of interest for the pound US dollar is around the 14130 regions. Alternatively though, if we do see a situation where there's a reversal back below the 20 simple moving average, I'll be looking at to see if the pound US dollar could trade back towards the 1388. Going on gold now. So with gold, as I said earlier, even though gold received a battering last week thanks to a strengthening dollar and rate hike talks, uh, this morning gold interestingly has ventured back towards the 1340 resistance level. Um, this is also a sticky level, a pivotal level. We could also see sustained weakness below the 1340 is always as interestingly open a path to 132415. But every time we've seen a breakout above the 1,340, we've seen 1,360. So it could be fair to say that gold remains in a really wide range in the daily charts. And until we see a decisive breakout above 136 or 132,415, gold could continue playing within this wide range. I have the pound yen chart I've been looking at on the daily as well. So the pound yen is notoriously volatile, as we can see. Right now, although the pound yen is in a rough downtrend, it seems like technical bounce could be in the process. I'll be looking at how the pound yen continues to react around the 1505, 150.50 level. This could act as a strong resistance if this resistance holds. This could be the creation of a new lower high, which encourages a decline back towards the 14850 regions. Alternatively, though, a breakout above 150.550 could encourage an incline to 151.50. Finally, the dollar index. So, last week we said that the dollar received a boost thanks to January's firmly hawkish FOMC minutes, which reinforced market expectations of higher US interest rates. While the dollar has started the week on the back foot by declining lower, bulls could still jump back into the game if the dollar index is able to breach above the 90.30 level, with 91 the next level of interest. Sustained weakness below the 90.33 could encourage a decline back towards 887 and 88 respectively. Okay? So ladies and gentlemen, does anybody have any questions in regards to the markets, market themes, fundamental themes to look out for in the week ahead? Oh, we have a question from Timothy about the outlook for the dollar yen. Okay, so let me load the dollar yen charts. We've been saying for extended period that when you look at the dollar yen, it seems the dollar yen's performance remains dictated by how the dollar behaves. And although last week the dollar appreciated higher, it seems that this morning, even though because the dollar is weakening lower, the dollar yen is trading is edging. But at the same time, even though the dollar yen remains dictated by the dollar's performance, we have to keep in mind that the yen still remains affected by market sentiment and risk aversion. So if we have a situation where market sentiment remains skittish and investors are offloading riskier assets to safe haven investments such as the yen, naturally this would strengthen the yen. Looking at the dollar yen though on the monthly, weekly and daily, it seems the dollar yen is still under pressure on the monthly, with prices trading below the 108.0 level. On the weekly, it seems previous support at 108 has transformed into a dynamic resistance which could pave a path to further downside. Zooming in closely on the daily now. Daily, I'll be looking closely to see if we have a daily close below the 106.50 level. Naturally, a breakdown and daily close below this level could inspire dollar yen bears to target further downside with 106 the first 106, followed by 10565. Apologies, 10570, the two key levels of interest. Okay. Okay, ladies and gentlemen, many thanks for coming to today's week ahead webinars, market themes to watch out for. For those who missed the first part, you can watch the post-recorded version on my FXTM, which will be released later today. For those who have more questions or interest in the market, please be free to subscribe to our YouTube channels on Tuesdays and Thursdays for more live market reports from our market analysts on markets. So I'll be seeing everybody again next week. I wish you all a happy trading week. Thank you.